Welcome to the Alternative Investor. RMB's Where to Invest in Africa 2021 report positions Egypt as Africa's top investment destination, with Morocco following and South Africa in third place. Based on the operating environments, other high-scoring countries have moved up the rankings, notably Rwanda and Botswana, now in fourth and fifth position respectively. For more, we're joined by the author, RMB Africa economist Daniel Kavishe. Daniel, thank you so much for your time. I mean, if one has gone through, the reports that RMB has put together looking at where to invest in Africa, this report is very different from the reports that we used to. So talk to me about the rationale of this new world that you've gone into, especially when you were putting it together.
Thanks so much for having me. You're absolutely right. We needed to make significant tweaks to our methodology when we approached the Where to Invest in Africa 2021. Like you rightly stated, the whole thing that effectively took place was the pandemic and its impact, therefore, on how it is we rank our various economies. You started off by just alluding to the fact that we've seen improvement in some of our operating scores for some of our different nations, Rwanda and Botswana featuring a little bit higher. And let's just take a step back and see what we actually then considered in this year's Where to Invest. So at the core of it, in terms of the economic environment, we looked at both potential for growth, which is captured through your forecasts of GDP over the next few years, and we tried to combine that with the market size of the actual economy. Now, traditionally, we've done this as well. What we did differently, though, is that we realized as part of your investment thesis, it is becoming abundantly clear that both investors and also your international and domestic investors are having a start look at the fiscal conditions in a country and using that as an assessment as to whether or not it's a decent investment environment. What I simply mean by this, it's the ability for government to be able to operate in this economy in an effective and efficient manner. More so during COVID, was government able to supply a formal fiscal injection to support the broader economy as it went through a deep recession? So we added a third indicator within our broader economic indicators, that being a fiscal score. And we think that this is going to become extremely imperative over the next few years. It's not just a function of what took place in the pandemic and government's ability to be able to sustain an economy. But if you think about it, how a country entered the pandemic, and so if you think about how high its debt figures were potentially as relative to the size of the economy, that could detract from government's ability to perform. And so adding a fiscal score that tries to capture government performance was something that was very key to us. And then in addition to that, we also saw a ranking that we had used for several years, having been halted by the World Bank, and that's the competitive score, the operating environment, which shows your ease of doing business, etc. And so we used other indicators to try and capture the ability of a country to have a strong operating environment that looked at everything from economic freedom to corruption, but then also at the same time, levels of competitiveness.
I mentioned in my intro that Egypt, right there in the top spot. Why is Egypt still in the top spot when it comes to top investment destinations? And what are the risks that one needs to bear in mind when you're looking at Egypt?
So one of the things we found is that Egypt entered this crisis on a much better footing than most of the other African countries. A few years ago, it just got off an IMF program. So from a fiscal score perspective, they were already doing quite well. They managed to rein in a lot of government expenditure. And what we tend to have was, a government that had strong revenues coming in on an annual basis with directed focus across the economy. That in itself put it in good stead. Another thing to consider, though, is, of course, the size of this economy, being one of the largest economies on a PPP basis on the continent, and the fact that it's still growing at a rather accelerated rate, hovering anywhere between 4 and 5%. And, it entered the pandemic with such strong growth figures to the extent that whilst most countries on the continent went into a recession in 2020, this was not the case for Egypt. It managed to shield against this and still edged out growth. In addition to that, I mentioned earlier just the efficacy of policy in the country. We saw both strong monetary policy and fiscal policy coming in during the course of last year to offer support to the economy. We saw designated efforts by government to be able to buoy really the tourism sector that had been impacted by the deep economic contraction that was being seen globally as a result of the pandemic and the fact that it had pretty much halted a lot of travel. So, to put it plainly, it had a lot of resilience entering the crisis. This could be seen during the course of the crisis. It's managed to bounce back. Activity is resuming, not only in the oil, but also in the non-oil sector. And we think this will continue to support it over the next few years. Egypt, again, is a country which has one of the strongest hydrocarbon bases, specifically gas reserves, across the whole continent. It can actually contend on a global scale. So there are a lot of features that allow it to be, the position that it's in right now.
Right. So Mauritius, has wonderful beaches and it's probably a dream destination for many people. There's also growth opportunities. Take me through a couple of them.
Sorry, just to confirm, you mentioned Mauritius?
That is correct.
So Mauritius, one of the things that we saw last year was, it was greatly impacted by the pandemic. You rightly said it is a key tourism destination across Africa. A lot of people may have argued that maybe it should have featured even a little bit higher within the rankings, but it's really the fact that as an economy, it is so skewed towards tourism. And so it went through a relatively deep recession. What they have managed to do this year, like you rightly stated, was that because of the focus of the tourism sector, they managed to get vaccination rates right off the bat, quite early off, January, February, that started vaccinating the bulk of their population. We estimate that they are getting abundantly close to having, the bulk of their population that can actually be vaccinated with double dosages already there, and they'll likely be able to start offering booster shots as soon as they're available. That's what's key, really, for Mauritius. You have other industries that they've started to grow, manufacturing, wholesale and retail trade, especially trying to expand within the broader SADC area as their market of target. But we really think that, the efforts that they put to get vaccination rates going, that will actually support the fact that, during the pandemic, a lot of people don't realize this, but they had a drop in tourism rates by between 90 to 95% within one quarter. So that was absolutely devastating. We do think, like you rightly stated, they will bounce back. By 2023, we think that the tourism sector would have gone back to pre-pandemic levels. And we'll see a lot of the other industries that they're operating also starting to drive growth. One other additional thing for Mauritius is, of course, low levels of corruption and the fact that they've managed to build for themselves quite a strong financial services industry. I mention that because that sits at the core of your economic growth, really the ability to link really lenders with borrowers within an economy and to be able to have sufficient financial products to fund your broader industries across the economy.
Right. Daniel, let's leave it there. Perhaps on another occasion, we can talk about some of the important themes for Africa in the medium term. And then also, I suppose, get a gauge in terms of where we are sitting with those themes and how they're likely to play out. But thank you so much for your time. That is Daniel Kavishe, who is an Africa economist at RMB. We're going to take a quick break. When we come